Welcome back to Kitco News. I'm Jeremy Saffron. Well, if you want to know if a market is truly broken, watch what happens when the lights go out. Now, last Friday, after the markets were closed in the U.S. for Thanksgiving, the CME Group, the engine of global price discovery, well, it went dark for about 10 hours. Now, the official explanation was a, quote, cooling failure in Chicago. But while the screens were black in the U.S., Asia kept trading, and the physical market told a very, very different story. Now, silver didn't just rally, it made history. And if you look at that chart, I mean, this morning, silver shattered its 1980 and 2011 peaks to hit a new all-time recorded high of 57.86 an ounce on the spot side. And meanwhile, Shanghai inventories are at decade lows. London has been relying on emergency tonnage. More talks, of course, of that silver squeeze over there. And Western paper markets are visibly decoupling from the physical reality. And I should say, I mean, gold is steady above $4,200 this morning. But the real signal is the gold-silver ratio, which has collapsed to its lowest level of 2025. The so-called poor man's gold is now leading global markets. And meanwhile, Bitcoin has cracked below $85,000 US. And the companies that once promised they would never sell are suddenly raising cash. Now, the liquidity that floated the crypto boom is starting to disappear here. My next guest saw this coming months ago when he was on this show in September. Now, he sold Bitcoin at 100,000 and he called silver a retail juggernaut. And today, the market is moving exactly in that direction. Joining me now is the CEO of Online Blockchain, founder of AnewFN.com, one of our regulars, Clem Chambers. Great to see you, Matt. Welcome back.
Great to see you too, Jeremy. Great to be right as well.
Great
obviously.
to be right. Yeah, I was going to let you just run with that for a moment. It was a great call. I mean, you're kind of pivoting out of crypto, and we'll get to that in a moment. But I mean, you know, let's start with this moment that we're kind of living through here, Clem. I mean, silver at $57, the highest price ever recorded, but it happened while the CME was offline for 10 hours. I mean, here's why I wanted to bring you in and talk about this. I mean, you've built infrastructure for 30 years. You know how these data centers are built. They run N+2 redundancy. Be straight with me here. I mean, does a broken fan really take down the world's largest derivatives exchange during a silver squeeze, or was that a circuit breaker pulled to stop? What are your
sure
thoughts?
Does. No, it sure does. I remember having being in a big service center with one of my sites. And they were redundant they had battery backup, they had generator backup, and they had power. So this was actually on Wall Street. And the power went down. So the generators went, oh, that's not good. And the batteries went, we're flat. Didn't anybody tell you? So the whole thing went down. Okay. So that's an example. That was about, 20 years ago. And I had another site, and another decade passes, and I was in another site that couldn't possibly fail. And they had someone put a backhoe through their cable. The next door they were building it, someone took a backhoe and cut their electricity. So guess what? The box that was meant to go, oh, hello world, the power went out, clunk, we're switched on to the generators. That hadn't been configured. No one had configured it. So boom, it went down. And they couldn't actually configure it because they had no idea how to do that. So they had to fly someone in from Seattle to London right away to get him to actually program it so that he could switch over to the generators and to the batteries. And it took them, fortunately, it went down on Friday night for us and we were market side. And it took them to like Sunday evening to go, hold on a minute, clunk, 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 up it came. So that's the typical thing. It can never fail. No. Redundancy. Oh, redundancy from redundancy. Oh, so many redundancies. Oh, no single point of failure. Bang, down it goes. So, yeah, it absolutely can happen, and it absolutely does happen. We had Cloudflare blow everybody up only a few days ago, and, it couldn't possibly, bang. So it can very, very, very much happen. But, of course, if you run out of silver, you can't just start a silver mine overnight and pull out silver. You can't suddenly get it, okay? And so, you can do all sorts of things with computers. It takes a weekend. But when you run out of silver, or the herd, the masses show up and say, give me some of that, will you? It just isn't there. And they just can't get it. And silver mines take 5 years to dig. So, oops.
Yeah. You're well said. Okay, well, I'm glad that you got to that because, of course, it was on a day that the markets were closed. It brought a lot of conspiracies out, right? Talking about how this could be a deliberate kind of pull of the plug. It would be career-ending for the regulators. I mean, it could be plausible that this high frequency algos maybe overloaded the system. But on the squeeze that you're talking about, I mean, December now has about 7,330 contracts standing for delivery. That's about 36.6 million ounces. COMEX only has between 70 and 90 million ounces of registered silver available for delivery. I mean, that means in December alone is half the entire deliverable inventory. I mean, even if a fraction of those contracts demand actual metal instead of cash, doesn't that imply that COMEX simply doesn't have the metal?
Yeah, but you see, that's all noise. Now, if it suddenly there was this big squeeze and tomorrow it went to 95, I'd probably sell. Yeah. But if it doesn't go to 95 tomorrow, or the week after, or the week after that, or the month after, or by Christmas, or by next Christmas, when it gets to 95, I'll probably sell. And I really, really don't care whether it's today, tomorrow, next week, next month, next year, or the year after that. That'll be fine by me to hang around for 18 months, but I think it'll be faster. So, if you're chasing the daily move, you're a day trader. Yeah. That's a great way to lose all your money. If you're chasing the move in the next 3 months, well, you're positional, and that's quite a sweet spot for these sort of things. If you're strategic like I am, you don't really care. I won't be sweating until we get in the 80s. And then I'll be going, what about tomorrow? Because it'll be approaching that, 100 that I see is not fate, but likely. Yeah, okay. It's likely going to 100. When it gets there, I'll make a decision on whether I think it's going to go to 200 or not, which it probably won't. So, it's like if you're going to be an investor, that's the best way to be. You can't help watch it every day because it's fun, right? But all this short-term stuff, it's like back in the day with Bunker Hunt. Oh, it's a corner, it's going to go through the roof. Oh, they changed the rules. Oh, it didn't go through the roof. Yeah. The point is that silver is a strategic metal. There's not enough of it. And one way to look at it is this. Gold, 3,200 tons a year is mined. Silver, 25,000 tons. That's 8 to 1. Yeah. That's all you really need to know. And if all of a sudden there's more demand for it than there is supply, it will go to some sort of balance. Yeah. And, is that demand going to be maintained for the long term? I believe it will. I think silver is going to be very, very important in what's up for next. So there will be the use case for silver is such that its price will be significantly higher than today. So although I can do, the silver is running out dance, I don't really, it doesn't bother me. If they run out of contracts tomorrow and it goes to 200, well, yeah, I'll sell. Yeah, because that will be a short-term thing. The long-term price is different. Mm-hmm. And that long-term price, if you want to really know what it is, just look at a sort of moving average and look at the trend on the moving average. And if you go back, say, 100 days, 200 days, 3 years, don't care. It will be on that trajectory, and that trajectory will keep on grinding up. So, the true story is somewhere between where it's going to be in 3 months and a year. Okay. And I'm riding that picture, and that picture to me is $80 to $100.
$80 to $100. Okay, because I was going to say, I mean, Clem, if 95 is your exit, I mean, what specifically gets us from 58 to 95? Are we talking that structural shortage you talk about? Is it more sovereign accumulation, or is it just a full breakdown of paper? I mean, what's the actual catalyst for your model going into 2026? Never thought I'd say it.
It's not a sovereign demand. Yeah. Sovereigns don't care about silver. They care about gold. Yeah, sovereigns care about metals or value they can put in a battleship and sell somewhere. And silver's too light for that, which is why the Americans threw it in Manila Bay when they left the Philippines at the Second World War, took the gold, threw the silver in the bay. It's too light, okay? I would say if I was really thinking that was coming, which it probably is, platinum and palladium's good for that because that is heavy and you can pack a lot of that into a sub, but not silver. However, silver is a strategic metal in two places. One, at retail. And when retail are seeing gold doing what it's doing, and it's going to carry on doing that, they start to think about, I think I need to load up on that. And of course, gold is, for $50, you get a tiny piece. Whereas silver, you get a nice shiny lump. And $100 is still a nice shiny lump for $100. $100 don't get you much shiny these days. Yeah. So with retail going with the flow, getting a bit of FOMO, that is the juggernaut. That is the unstoppable horde. And if they get a flavor for silver, and they are getting a flavor for silver, they got a flavor for gold. Now they're getting a flavor for silver. Well, that's a juggernaut that will drive things to $100. Now, behind that is a strategic need for silver in AI. And any hard commodity is going to stop being a commodity. It's going to become a luxury. And I've been saying this, it only dawned to me. I was at a gold show, the Gold Messe show in Frankfurt, with a lot of people that have been following gold and all that stuff for a long, long time. And then they're talking about commodities. And that word was just buzzing in my brain. I thought, these aren't going to be commodities. They're just going to get sucked up by the AI maelstrom. And they're going to have to be luxuries. Yeah. And silver is one of them, because silver is the best conductor of heat. And AI is going to be all about getting rid of heat, because you've got to pump so much energy in. Now, if you think about an AI service center and they're building them, they're going to cover the world with these blooming things. You have all this stuff in a shed, and energy comes in and information comes out, and the information comes out on a tiny little piece of string, tiny little optic fiber. And all those resources are going into that big metal box full of raw materials, full of gold, silver, rare earths, cobalt, you name it, lithium, fancy cooling stuff.
Yeah.
And that is the future. All those wonderful commodities, which we think of as commodities, because you get loads of them at a low price, that world's going away. And, that's going to be actually turned into great things. But, it's all going to get sucked into these server farms. And you just have to see what they're building out there. Was it $1.5 trillion going into that? 1,500 billion. Million.
Yeah.
It's just huge sums. And mainly it's going into the sort of raw materials that make the sort of things that NVIDIA make, and all the cooling and all the racks and all the cabling and all the transformers. It's really down there at the base of the value chain.
Yeah.
And it's going to take it all, and it's going to take all the energy. And, what does that do to prices? Well, if you think about commodities, if you think about your iPhone, you think about how much raw materials is in that $900 or $1,400 piece of kit. It's not that much. It may be $150 of stuff, which is, a good model if you're melting it back down again. But if it actually went from $150 to $500, how much will that change the picture for the price of that iPhone? Not hugely. So there's plenty of room for these foundational items to go up a long way without actually affecting the day-to-day price of things. But that is coming. And the big one that is really coming is this stuff's going to take all the energy, absolutely all the energy. And that's why they're building nuclear power stations. And just think about nuclear power stations. Why the devil are they building nuclear power stations when they were actually Satan incarnate only a couple of years ago? Well, because all the energy that you could possibly imagine is going to be used on this stuff.
Yeah. And I think you said something there. I mean, if sovereigns, we were talking a little bit about sovereigns and silver. I mean, if they don't care about silver, why did the U.S. just add it to the critical minerals list, right? I mean, it's not a retail decision. It's a national security one.
It is a critical mineral.
Yeah.
In the future, if you don't have silver, you won't be able to build out the infrastructure, which they're fighting the Third World War over. And they're going to start fighting the Third World War at the AI level. And that involves all this. That's why they're spending so much money. That's why they're giving the green light to Silicon Valley to build out trillions of dollars worth of infrastructure. Because there's no second place if you're a state if you don't have the best AI, because another country will be smarter than you. And then where you're going to be? You're going to be in the dumpster, aren't you? So you've got to have the best, most powerful AI. And to have the best, most powerful AI, you've got to have the equipment. You've got to have the energy. You can't do it without copper. You can't do it without silver. You can't do it without cobalt. You can't do it without gold. Yeah. There's no limit to the demand for AI. Therefore, there's no limit to what goes into AI, which is energy, hard commodities, stuff, basically, and, software, but that's intangible. It's the actual hardware of AI that's going to be sucking up all these raw materials. And they're going to get very expensive because there's no second place. And if China is better at AI than America, America's finished. And if America's more smart than China's got a major problem. And heaven knows what Europe's going to do, because either America or China is going to win, and they're not going to be even in third place at this rate. And then what? You've got America smarter than you, and China's smarter than you, oh, that's not going to work out very well, is it?
Mm-hmm. Hey, talk to me a little bit. I mean, we were talking off the air, and you have a big thesis on copper. I want to ask you because, I mean, it's already pricing above 11,000 today with supply stress this early. What happens if the U.S. tariffs kick in? I mean, does copper become the first industrial metal where geopolitics, not economics, kind of set the price here?
Well, it is geopolitics that is setting the price here because there's a conflict. And it's based around the ability to build out your raw materials into machines that have intelligence. I mean, that's it. That's it. You know, if they hadn't uncorked that genie, we wouldn't be looking at this now. We'd be looking at electric cars and all that good stuff and, you know, capturing CO2. And, you know, you still hear all that. Have you not noticed that people talking about CO2 and climate change and all that stuff? Have you noticed how that's kind of going away? Yeah,
I have.
Well, of course it's going away because they've got to boil the oceans to fight this AI war.
Okay, well, where's the trade? I mean, are you going into, because, I mean, if copper is the kind of industrial choke point and silver is the monetary squeeze, then where does gold fit in between them? I mean, is it still the safe haven or is it becoming the lagging indicator in this cycle?
Well, I mean, I think gold's got a ways to go. Okay, but I think it can stop. It could, you know, it's gone up a lot as a percentage.
Yeah.
And I think there's lots of other things that have got a lot more percentage in them. Okay. So, for example, platinum and palladium have got a lot more percentage in them. And I think you'll find that silver's got a lot more percentage in them. That's not to say that gold hasn't got a great percentage upside in it. But when you start to, I mean, a lot of people on your show will have precious metals up to their ears, and good on them. They're going to be doing extremely well. But a lot of viewers in your show are going to be people that miss the boat, miss the precious metal boat. They miss the stock boat. They've been sat there reading all this negative press about there's going to be a crash since 2008. And they've been sat there scared to death and have missed all this money that they could have made. All the Apple upside, all the Mag 7 upside, all the gold and silver upside, all the upsides, because they've been terrified that, you know, what happened in 2008, 2009 was a prelude to some massive financial Armageddon. Well, it didn't come, did it? Not only didn't it come, anybody that held pretty much anything in stocks or commodities has done really, really well. Well, you know, that is the thing to bear in mind. This AI is not Armageddon. It's the next boom, and it's going to be giant. And you don't have to have NVIDIA to ride that one. You could just think of all the things that fall out of that idea and stake your place, the thing that you understand. There's going to be a massive economic boom, massive economic boom. There's going to be winners and losers, and the losers are going to be the ones that say, no, it's all rubbish. Oh, AI is no good. Oh, it's all against God. Oh, no, it's all going to come to an end. They're going to lose out big time, like they lost out last time around. And those that are going to actually make the money are the people that are going to go, wow, this is massive.
Yeah.
I don't know how it's going to be massive. I don't know where and when it's going to be massive, but it's going to be massive. I'm going to work on working out how I can jump on this ship. It hasn't sailed yet, and it probably never will. But if you just stand on the stock side looking at it, saying that boat's going to sink, you're going to be left, well, high and dry, literally.
So, Clemmer, I mean, are you going for the picks and shovels? Are you going for the energy plays? Because, I mean, for the people who feel like they missed the boats, I mean, what's the intelligent move here? Wait for a pullback? What's the trade? Do they scale in or accept that bull markets punish hesitation?
Well, you should. There's always another bus coming. There's always another bus coming. It's like gold. I mean, gold's a nice place, could double. I'm kind of expecting it to. Yeah. But, I mean, copper, platinum, palladium could triple. Copper could, who knows how many X's you could get on that. What's going to happen to oil at some point? I mean, oil's going to go mad. Probably not soon, but sometime in the next, say, 3 years. So if you realize that oil is going to explode sometime in the next 2 or 3 years, and you just write down why, and then wait till your reasons start coming together. And then you can take your position. So all you have to do is go, is take a big position and then break it down into smaller positions in terms of what happens next. Write down how it's all going to pan out, and then just watch for it to pan out or start panning out, and then you can jump in. But if you've missed gold, or you think you have, that doesn't matter. What about silver? Maybe you missed that one too. What about platinum? Oh, that doesn't look so much missed. It's up 50%, but palladium was whatever it was, $3,000 an ounce only a couple of years ago, and it's only 1,300 now. What about copper? How far could that go? What about aluminium? Hasn't gone anywhere yet. What about nickel? What about all the other things? It's plenty of games to play.
So, I mean, I'm hearing you betting on a hard asset world, right? I mean, what's the common thesis here on things like copper, palladium, oil? I mean, is it a supply crunch world? Is it just a geopolitical volatility world?
Yes.
Yeah.
It's all coming together, isn't it?
Yeah.
You've got this situation. What is obviously going to be, conflict of one kind or another with China. Yeah. And then you've got AI, which is really, a genie out of the bottle that's going to do amazing things to productivity. It's going to do all sorts of unbelievable, unpredictable things. But it's going to be a massive boost to productivity. Now, when I was a kid, I used to watch television. There was always moaning and groaning about there wasn't enough increase in productivity. And that was the big thing that was missing in the world, was more productivity. Then, of course, mobile phones came along and destroyed productivity entirely. But AI is a massive productive tool, which, of course, will put lots of people out of their current jobs. But it doesn't mean they won't get others. It doesn't mean that there won't be jobs with much better return on investment, with a huge leverage effect on the global economy. And that's what I think is coming up next. So really, it's just, are you going to ride this or not? If you're going to sit this one out, you're really missing. And it's up to you to sit down and work out where it's all going to be kicking off. I just see that commodities, hard commodities, now not soft commodities, hard commodities are going to be in very, very short supply. It takes 5 to 10 years to dig a mine. So the old joke is the solution to high prices is high prices. Well, if it takes you 5 years to produce more metal, it's going to be a long time for high prices to, improve, to make prices go down from more supply. Okay. So there's this massive, and mainly environmental issues, massive bottleneck to bringing on new production and things like, or anything really, any mineral at all. So you're going to get this huge increase in demand. Let's just say large increase in demand and no increase in supply. And they were singing about not enough copper before AI came around. And now you've still got the environmental issues that copper can help. And then you've got this massive AI event, which is going to consume vast amounts of copper, because what's really going to be consumed is AI is energy plus stuff.
Yeah.
That's it. And a bit of software. Energy plus stuff. Well, that energy is the demand for energy is just going to go off the dial, absolutely off the dial. And people are already starting to realize that their electricity bills are going to go through the roof because of this. And that gives you an indication. Right now, people are going, oh, my electricity bill is going to double. Well, what does that say about everything else? Because they're going to just hold it in your mind. They are going to boil the oceans. There is no second place in AI. There's no limit to the demand. There's never been such a thing.
Yeah. Okay. Well, this is good. I mean, I guess we could bring up some receipts then, because it doesn't look like you're going to be trading Bitcoin anytime soon, because obviously, on September 26th, you sat here, you said, I sold at 100,000, I'm out. Now, today, obviously, Bitcoin's below 86,000. Is this the crypto winter that you predicted back in September, or just leveraged players getting flushed?
Sure. I mean, I wrote an article last night that said, oh, isn't it interesting? There was a liquidity squeeze and everything went down, because if there's not enough money to go around, assets go down. So, they're pumping 100 billion or whatever it was that got pumped in over the last week sometime, and up goes everything. And then, job done, up goes everything else, down goes Bitcoin. So it supported all assets, but the moment that surge of new money wasn't surging, down comes Bitcoin like a lump. And it hadn't come down like a lump like it did last night. And I drew a graph which said, it's come down, there's a little hook up, and it's probably going to go like that. And then in the morning, it went like that. And, it's in a bear. It's in a bear, and it's going to be 60,000, somewhere between 60,000 to 40,000 before that's over. And, with these things, it's likely to happen fast, but you'll always have, relief rallies, but the crypto winter's begun. The thing that I hold in mind is not your keys, not your Bitcoin. Bear that in mind, people. if you really are going to hodl through this, and why not? There's going to be fairly large amount of carnage in the crypto world if we are in what I think is what I believe we are in the crypto winter. I'm not Nostradamus. If I'm right, there's going to be casualties, big casualties on the way down. So bear that in mind, because every time this sort of stuff happens, there's always casualties. Those people that are being, pretending, when the tide goes out, they're the ones, as Buffett says, that get found out that they're swimming naked. And there's going to be a fairly large amount of that this time. So bear that in mind. If we are in the crypto winter, like I think, there are going to be business failures, and they're going to be very painful.
Yeah, interesting. Okay, well then, you might piss some people off, but last time we had you on, you said that strategy would be the one to watch, that its chart was flashing a bearish warning, and that crypto reserve companies could become, this is your quote, not mine, the FTXs of this cycle. Now, they've created about 1.4 billion in a cash reserve just recently, and openly admitted that they have to sell some Bitcoin to do that. Is this exactly the stress event that you were predicting?
Well, I didn't say strategy equals FTX.
Yeah.
I said strategy is the one to watch, because they are the 800-pound gorilla. They're the ones that invented all this funky stuff. And I think their share price has fallen significantly since I said that. And I'll take that prop, but I'm not going to say that they are FTX. I'm not going to say. I wish them the best of luck, and I wish all their shareholders the best of luck, and I wish everybody in crypto the best of luck. But there will be casualties, and who they'll be, well, we will see. And a lot of the Bitcoin treasury people, well, what a bunch of jokers. And I would expect there will be a lot of casualties in that zone. Who they're going to be, I don't know. Even if I did, I wouldn't tell you, because that'd be wrong. I'm not shouting fire in the theater about this. Yeah. It's just that we're in the Bitcoin winter, and people need to take what I say as raw material for their own thinking. But every time, every bubble bust in every asset ever, there are always significant casualties. And this will be no different.
Yeah, interesting. You think 40 to 60,000? Do you see a bullish time where liquidity increases? You think this price will go back up?
Well, it'll go through the cycle, won't it?
Yeah.
It'll go down. And at some point, everyone will say, oh, it's all over. It's all dead. It's all gone. Oh, no, we were scammed. Mummy, it's not fair. And the cycle will repeat. Now, whether it will repeat in a doubling again to $250,000 a coin, that I'm not so sure. I was pretty sure that last time round it would go to 120,000. 250,000, that's... Oh. You see, the whole thought process is that there's 100 million Satoshis. So if one of them is worth a cent, that makes that makes a Bitcoin worth $1 million. So it's hardly Einstein mathematics. It's just, there's 100 million of these. That means if every Satoshi is worth a cent, a coin would be worth $1 million. So, it's schoolboy logic. It doesn't have to happen. It could, because it doubles, and every time it doubles and does its thing, every cycle has always done. Everybody looks at me and says, I'm stupid. How obvious that isn't. No. But it's third time around now, or even fourth time around. And I'm expecting it to do the same thing. However, now it's kind of bolted into the financial system. We might not get another cycle, but we will see. Is whether it recovers after the crypto winter is an open question. I'll talk to you about that in 18 months. But right now we're a good chunk into the crypto winter. It will fall to its bases, and when it bases, it'll go sideways for a significant amount of time, and then there'll be a halvening, and then it will do a bit of a rally.
Hey, let's talk macro for a minute, because obviously this is the real pin to everything. Japanese 2-year yields just hit that 1% just today, a level we haven't seen since '08. Governor Ueda is signaling a December hike of all things. If Japan raises rates, does the global yen carry trade unwind? And if it does, what happens to the U.S. tech stocks that were funded by cheap yen?
Well, I don't think they have been. Okay. The carry trade with Japan is a thing. Okay. And, it will continue to be a thing, and the Japanese can and probably will hike their interest rates a bit, but, they're hardly anywhere near the American rates. The differential is quite big. So if you can borrow yen at, I don't know, even 2.5%, yeah, and you can take it to America and get it into a stock that's going up 30% a year. Well, why wouldn't you? I mean, there's many reasons why you wouldn't. The cost of hedging it, blah, blah, blah. But wherever there's a significantly low rate of interest, i.e. Japan, there will be carry trades going on. And every time, the time before last, there was a pressure on the carry trade, America just prints money and away they go. So it's not about the interest rate, people have to understand. It's about the availability of money. It's all about the availability of money. In the old days, it was about, could you afford the money, not could you get your hands on it? Well, back in the day, you probably couldn't get your hands on it. And if you got it, you couldn't afford it. But these days, it's not really about whether you can afford it. You can always find some spicy place to gamble with it if you're, in the financial services market. It's whether you can get your filthy hands on it or not. And that's down to the Fed and whether they push the lever of more liquidity or pull the lever and say you can't have it now. And, that is the situation we're in. And the regulators, the financial regulators, particularly, America takes the lead. They adjust liquidity to produce a bullish environment for assets at an angle of attack which suits their purposes and the purposes of the governments and their fiscal policies. So effectively, they adjust liquidity for the desired economic result. And that economic result is rising asset prices. And that's what we've had for a long time now, and they still know how to do it, even when it all goes a bit pear-shaped because of government shutdown and the fact that they're changing cogs in the monetary engine like the Fed's been doing recently. Even then, you get a little bit of a stutter and they pull the lever of money supply, and in rushes the money and up goes the assets, and it all stabilizes out. So they have the tool to do that. There are other things that can cause big problems, but money supply in the short to medium term, I'm not saying long term, is not the problem.
Yeah. It's interesting. I mean, because obviously in true liquidity crunches, you sell what you can, not what you want. Gold and silver usually get liquidated first. Why are metals rising if liquidity is supposedly disappearing? Or is the printer just simply coming back on?
Look, it all went up, including Bitcoin, because they injected $100+ billion. So I read. I mean, I wasn't sat next to Jay Powell. He did tell me. But they injected a very, very large amount of money. And that goes straight into the system and goes straight into all the machines that trade and play with assets and value assets and process assets, et cetera, et cetera. I mean, it's literally fuel to that. Literally, they could pull all that money out and everything would crash. They could just pull a lever and it would all crash. And they could pull a lever and get rid of inflation. And they could push a lever and make more. I mean, that's what they do. But they are trying to balance. Well, employment is one of the things they say they try to balance. Asset prices is another. Oh, sorry, it used to be called inflation, didn't it? Yeah, inflation and employment, which means balance a economy growing as much as they can make it grow without creating inflation, and to grow as much as possible to get the tax revenue up, to pull the money in so that the government doesn't have this ridiculous runaway deficit that it has. And, they are trying to keep the train on the tracks. And the problem with the train is not them, it's the blooming politicians spending it like water. I mean, in the UK, they went, oh, yeah, let's tax and spend. No one's expecting that from socialists now, are they? Oh, let's tax and spend. Yay, yay. Well, we know what happens. It all goes horribly wrong at some point. Mm-hmm. But the central banks have become much better at putting that day off or kicking the can down the road than in the past when they used to just sit there and go, we're not intervening. No, moral hazard. And they've chucked moral hazard out the window about a decade ago, and they just go, whatever it takes to keep the wheels on. If the wheels come off, the outcome of that will be way worse than if we, have a bit of moral hazard. And, they are basically the facilitators of the crazy politicians with their spend attitude to things. And that facilitation is taking us down the road that we're on.
Yeah, well said, Clem. And a lot of people watching you right now. And I mean, you nailed your Bitcoin exit. You were right on the silver breakout. You've been early on copper. I mean, for the audience watching right now, where's Clem Chambers deploying fresh capital?
Well, I will point out Intel, which I think I mentioned on your show when it was $20. I will point out platinum and palladium, because if you're going to do a victory lap, I mean, you've really got to be waving the biggest flag, haven't you? But anyway, where am I right now? I'm still positioned in defense stocks, European defense stocks. I've got my eye on American defense stocks, because at some point, if they start to move, I'll start to run. But I mean, if they could start to move, and that would be very bullish for precious metals. And I'm looking at copper very hard, and I'm positioned into copper. I'm looking at aluminium hard. I'm not positioned in aluminium because I don't. It's tempting, but I'm not there. And the big one, maybe 18 months down the line, is going to be oil. Oil is going to go on a very interesting road at some point, because they cannot build those nuclear power stations fast enough, and they do not have enough electricity. And it's a matter of national security to have your AI better than the guys that don't like you so much, or better than the guys that are taking all your money through imports anyway. So the AI thing is absolutely pivotal, because the conflict between America and China intersects at AI. And what goes into AI and all the aspects around AI. I tell you, if someone came to me and said, I'm thinking of training in a career, what career should I train in? I would say air conditioning engineer. There will not be enough there will not be enough engineers for that going forward, because it's going to be one of the big things. I mean, I've actually looked at air conditioning as an idea. Haven't come up with any ideas in air conditioning, but that's the sort of thinking I'm on, because raw materials and the elements of AI, there's just going to be this huge $1.5 trillion sucking sound of pulling that stuff into this whirlpool that is AI. And that genie is out of the bottle, like the steam engine. When they made one, it started pumping water out of mines for a bit, and before you knew it, it was trains, it was all the other things, and that is what AI is going to do. So right now, precious metals, European military and security, a little bit of American, not much. And I'm looking at more copper. I'm looking at starting to position in aluminium, and I've got oil on my dial to watch out when it starts to behave in a way that I'm expecting it to. Which most people say, what's going on there? What did you do that for? I don't understand. Why is it doing that? And that'll be because of what I've just said.
Interesting. Okay, well, that's a good one. And it all takes energy, to your point. I was writing down some notes there while you were talking, because as you're talking about that thesis, you're talking about your book. I mean, it sounds a hell of a lot like kind of war, right? I mean, platinum, palladium are wartime metals used in munitions, catalysts, and high temperature alloys. With global rearmament exploding, Clem, I mean, is the market asleep or is demand overrated?
Market's asleep. I mean, it's quite interesting. I'm working in all sorts of very, very interesting areas. Yeah. And in some of those areas, they all go, World War started, 2027, get that date in your diary. If your stuff's not ready by then, we're not interested. And a load of other people going, what are you talking about? What? Take that tinfoil hat off, what are you talking about? So, a lot of people, it's like AI, a lot of people haven't woken up to the consequences. I burst out laughing when Elon Musk said it's going to take all the energy in the solar system and then the galaxy, because I know he's right, and I know no one else will listen to that or think about it for 1 minute. They go, well, he's just a mad bloke. Yeah, all right, he's the richest man in the world, and all right, he lands rockets backwards from space 2 at a time on floating barges, but what does he know? Yeah, and when Jeff Bezos goes, server farms in space, I'm going to do that, everyone goes, oh, well, he's just a bald guy with a nice girlfriend, what does he know? And I go, Arr! Yeah, so it is a big, hairy deal, but it's also about conflict between who's going to be the exceptional power in the world going forward. And, that is that geopolitical idea and the conflict between China and America. Now, you can say it's a Cold War. You can say it's a trade war. You can say it will be an AI war, and please let it remain at those levels, and hopefully it will be. But the impact of America waking up to losing its hegemony in the world and pushing back, well, that's gigantic, isn't it? And then you've got this this kraken that's been released of AI, and that's where they're going to be fighting at first over who's the smartest. And, well, hopefully that works out and it doesn't go down to who's got the biggest muscles and who's got the biggest stuff that goes bang. But, everybody in those areas are thinking in those terms of being prepared that, if things don't get reasonable, that it could start to fall down into that level. And we've seen how ridiculous and stupid people can be in the Russian-Ukrainian conflict. I mean, think of the logic of that. There isn't any. And millions are dying, and there's no logic there. So the ability, you see, I'm not worried about AI. I'm worried about NS. And you're going to say, what's NS? And I'm going to say natural stupidity. There is no shortage of that. And it's causing terrible trouble right now. And there seems to be no end to that. And, that's why we're buying gold and silver, isn't it? It's not because of AI. It's because of natural stupidity is on the rampage. And AI then sweeps up all the other metals.
In your analysis, Clem, I mean, how closely are you watching Venezuela right now when you're looking at this long-term thesis on oil?
It's a side issue. Don't care.
Yeah.
It's really, there is nothing compared to China versus America as a thesis or as a conflict. And if someone could come around to me and say, don't worry about it, I will prove to you that this is not a thing, my whole structure of what I'm doing would completely change. And then I would be worried about Venezuela, and I would say, oh dear, that could move gold, $1,000 an ounce. I think I'm just thinking of things that are multiples of that, really.
Yeah. Well said. All right. Eye on the prize, a seismic day. I mean, just a crazy one here for metals, markets, and macro. Clem Chambers, some great analysis over at anewfn.com. I just watched you. I mean, you're getting some new things out there, Clem. Great work.
Oh yeah, well we've started. It's going to be the UK to start off with. It's basically a financial data platform, and we're providing real time prices, which is we have to pay like $15 a month for that, and we're doing order book level 2, which costs like $75 in the UK for that, and we're doing that for nothing. It's free. I've done a deal with the London Stock Exchange, and I've got it for free. And anybody who's an amateur, private investor. Can come and get it for nothing, and that's very exciting because we're having a lot of fun with it, just a lot of fun. And I'm having a lot of fun, like coming on your show, doing some Substacks, doing my YouTube, which is all going ballistic, which is, it's like silver and gold. My YouTube and Substack are going ballistic too. So what could be better? So I say to people, look, there's nothing you can do about what's going to happen in the future, really. There's very little. The only thing you can really do is provide for you and yours. Yeah, and if you can get the markets right, there's no better way to provide security for yourself than through the wealth you can build in the markets by being right. If you're wrong, not so good.
Just every once in a while, not so good. All right, mate. Appreciate your time. Thank you so much. Have a great, I guess we're almost closing in on the holidays, on to Christmas. So have a great holiday season. Thank you.
I'll be on whenever you call.
Cheers, Clem. Appreciate that. All right, for more interviews that cut through the noise, subscribe right here to KickOn News. I'm Jeremy Saffron. Lots to get to this week. Of course, we're going to be carrying on with some great analysis. Stay tuned. Thanks for watching. We'll see you next time.